How's it going, everyone? It's Sam. I want to talk to you about my portfolio today and reveal it all to you. I've done this before. I usually do about once a month. I always like to be very transparent, especially with all of you guys because you are loyal subscribers and loyal viewers. So I want to go through my portfolio, show you exactly what I hold, how much I hold, my thoughts on different stocks, and all that kind of stuff. Now, I hold about 6 or 7 different accounts, whether it's brokerage accounts, Roth IRAs, 401ks, old 401ks, and they're across multiple platforms. Now, it can be very confusing if I just go through and show, hey, this is this portfolio, this is this portfolio, because you don't get a full view of what are my largest positions because they might be spread across 4 different portfolios. So today I'm going to show you it based on the percentage of my overall portfolio. So my stock portfolio is around $100,000. I have money in crypto too, so I'm doing another crypto portfolio reveal soon, and it's actually, relatively large, not bigger than my stock portfolio, but it's not just 10% of my investments or anything like that. It's much larger than that. So I'll be revealing that at some point. So this is just the stocks. Now, of course, as always, this is not financial advice, but I do want to show you it for full transparency. Like I said, if you guys don't mind just hitting the like button. Videos like this you always get a hard time for. So if you don't mind hitting the like button, I really appreciate that. There's also a link down there to Webull in case you want to try out the platform. That's where I have a good majority of my money on here. You can get some free stocks, just deposit $100. There's also a link down there to the Patreon. So we've been having more people join that recently. Definitely check that out if you guys want to know what I'm buying and selling. Also, I do have some exclusive videos. There's some exclusive live streams. And you get in there with about 2,800 or 2,900 other people. So definitely check that out down below if you're interested. Now, we're going to kind of blow through the first probably 10 to 20 holdings here because of the fact that I just don't have much in them. A lot of these were when I was buying more penny stocks, and I wanted to take advantage of some of the massive price swings in the market, but I didn't want to throw in a lot of money, which ended up being good because a lot of them went up pretty significantly. I'm still in the green on a lot of them, but then some other ones have come down pretty hard. So that's why I think diversification is key and not going overly aggressive on something as risky as a penny stock. So AMC, I know it says 0.00%, but I have 1 share of AMC. I bought it during a live stream during the whole AMC saga, so I am holding on to that. I'll probably never sell it, so it's not even really worth mentioning there. But we have Humble, which used to be, what was that? I forgot what the ticker symbol used to be, but I bought a very small amount when it was very inexpensive back in the fall. I fell onto it. I'm just going to hold on to it in one of my accounts and then probably not look at it for 10 years and then just see where it's at. It's one of those ones where it's going to be either $100 or like a 10x over the next 10 years, or it's going to be worth zero. So it's risky, but I just have a very small amount. COUV, definitely my worst stock ever. I bought it and went up 30%, and then they had some problems with the SEC and stuff like that, so it crashed down. I'm still sitting on it. Big Five Sporting Goods, I just started buying this in my dividend portfolio, so I have a couple $100 worth, not anything that is super large or anything like that, but it is a company that's growing quite quickly. Time and FRSX and CTXR all are those types of penny stocks that I was talking about, just have a small amount in them. Packer, I have a little bit more money in, so they're more of a blue chip semi-truck company. Then we have AGTC, another one of those like medical field type penny stocks. And again, I have probably 2 or 3% of my overall portfolio in some of these, but overall, it's not a large portion of my portfolio. Fubo, I bought a long time ago. Before it pumped up to $60, I bought it. I haven't added any more. I have been thinking about it over the last couple weeks because it has fallen pretty hard. ARCG, I have a little bit in. I bought it again back in early February. Apple, I just started to add Apple to my dividend portfolio, so definitely one that I'd like to get more of over time. I really should have more of my portfolio in Apple. I'd love to buy Google and stuff like that too, Amazon, but I just feel like there are probably better opportunities out there based on this market environment. ABML, a great battery recycling company. Definitely one that I'm going to hold on to for a long time. Anything can happen short term, but I think it will do well long term. VACQ, one of the space related stocks that I hold. It's still pre-SPAC merger, and it's definitely been hard with a lot of the other SPACs that are more high multiple SPACs, but I like the company behind it that they're merging with, and I think again, it's going to be one of those companies that probably won't go away in 5 years. It's probably going to be much larger and do a lot more business, but it is something where, okay, it could stay stagnant for a little while just because it is high multiple. It could even fall, but years down the line, it could be a great stock to hold on to. And again, we're in some of the smaller stocks here. We'll get to the top 10 here. IPOE, bought it a long time ago. Foot Locker, bought it a while ago. I plan on just holding those. Well, IPOE I might sell if they move up before merger with SoFi. CCIV, another one that's just kind of a higher risk car play. Sen stock, DMTK stock, both bought, had nice returns. I trimmed my position on DMTK when it was up 100%. And now it's come down to about where I bought it at. DKNG, I would love to buy more of some of these gambling stocks. I think that they're going to expand a lot over the next 5 years, probably over the next 10, 20 years even. Etsy, I just bought recently, and I just really like it, and I was able to pick it up when it crashed after pretty good earnings. Then I PaySafe, again, another stock that I bought in pretty heavily right when they announced the merge, I believe it was, and I was pretty excited about that. I've been thinking about adding more, but I haven't gotten around to it. Planet 13, I actually bought this right when I started YouTube, and I bought it just to track how it pumped up after Jeremy from Financial Education covered it, and that was one of the better investments I've made, honestly. I think it's up over a couple 100%, and I should have bought more at the beginning. I added more towards the end when it was around $3 or $4, but I started buying at $1.25 or $1.50. Now it's around $6 or $7. Qualcomm, just a great kind of, I don't want to say blue chip, but a great semiconductor company, a great chip company. It's going to be really important with 5G coming, so I'm just holding on to that one. They do pay some nice dividends too. ARK-K, this is another one of those ARK funds that I think will do well long term. Definitely hit hard recently, but I'm not selling it. I think it holds a lot of great companies in it. And again, it's just a small part of my portfolio. If you didn't want to buy stocks regularly, going with something like an ARK fund, honestly, I think would be good for diversification. Then I have AHAC, a very low risk, in my opinion, SPAC stock. I bought it. I'm holding on to it. I'm either going to probably sell it or add more to it, honestly, soon, just because I think there might be things that move a little bit quicker than AHAC. I think it's a good company, the company that they're merging with, and they have big partners. The thing is, though, it's just not a large enough portion of my portfolio to cover it all the time or to think about it all the time. Like, it's not something like Tesla where it's really easy to track because there's a lot of information on it. And the thing is, it's large enough too that I really need to do one or the other. So I'm considering what to do with AHAC before they merge, but for now I'm just sitting on it. Again, it's like a $10 SPAC right now. MP Materials, great long-term play on rare earth materials. I think it's going to do really well. The expense of rare earth materials is going up all the time. Like the value that you're going to get from MP Materials is really good right now because the cost of these rare earth materials is going up. They're also the largest mine outside of China, which is really important too. Then I have Tesla. I've been adding a little bit more to Tesla recently, and honestly, I don't mind adding more to Tesla. I'd love to add more over time, and I think this is actually incorrect. I have more in Tesla. How I did this is not correct. So I think I have around 4% or so in Tesla. You might see another Tesla line down here. But we have Realty Income here at 1.5%, part of my Roth IRA, part of my dividend portfolio. Just a solid company long-term. BNGO, I'm up 300, 400% still. LFMD, another telehealth play that it's moving up a lot recently, but it fell significantly. It's, again, one of my worst stocks, probably one of my bottom 2 stocks I've ever bought. But it got hit with a short report. Then it fell during the growth sell-off. the growth stock sell off, and it's just been hit hard, but it's come back about 100% since its low over the last couple weeks. IIPR, another really interesting REIT, so a real estate investment trust. They are in the MJ space, and they're a triple net lease company. Pretty interesting, pretty great growth, honestly. The one thing I worry about with IIPR is if there is some time where they end up, where banks allow you to get loans as one of these MJ companies, I think it will be tough for IIPR because they're getting really good rates because these MJ companies don't have access to regular banks. But for now, I am holding it. Again, great growth, good dividends. Then we have STEM. STEM is a energy company. It's growing really quickly. They had good earnings recently. They're growing at, I believe it's about 400% revenue this year. At least that's what they were expecting. And they do have some large partnerships. GNPK, my largest weighted space stock now. It's one that's already making money, significant amounts of money. They're kind of like a conglomerate where they bought a bunch of different companies and they all go under GNPK now. I think it's kind of like a diversification play into space. So I think it's one of the better valued space stocks. Square, just a great company. Again, in the financial space, I think it's one that I'll just hold for a long time. I was able to get in the low 200s, which isn't awesome, but it did go much higher than that recently. Teladoc, definitely been hit hard recently, but I was able to pick up some shares on the dip. It's one that I think will do really well because I don't think we're going back to visiting doctors in person, or a lot of us aren't. I think a lot of us would rather just do it online. Now, there's some talk about whether it is just the industry itself is just too competitive and the margins aren't good enough and stuff like that. So that's why one of the reasons why Teladoc has definitely fallen down recently. It's also kind of high multiple. We also have Store Capital, another great REIT, probably the best REIT out there. Coinstock, which is one that I bought from IPO day after it fell down a little bit. I bought there and then I bought all the way down. I honestly should add more. The thing is, I have a significant amount in crypto, so I don't want to be too heavily weighted into Coinbase or any of these other exchanges. Then I have Tesla again, so I actually have, what is that, 1 point something percent up here, 1.3, and then I have 3. So I actually have 4.3%. Apologize for that. But I have 4.3% Tesla. I think it's a great company to hold long term. It is expensive, right? It's very polarizing whether you like it or not. But overall, I think it's more than a car company, and they're going to expand into a lot of different spaces. Voyager Digital is another crypto exchange. I use the app. I hold money on the app. I hold the stock. I think it is growing like crazy. Their last quarter revenues increased 16x from the quarter before. Obviously, it's very reliant on the crypto market in general, but I think that it has probably more potential than Coinbase stock, at least in terms of like explosive potential. Now, it is riskier too, but I think there is a lot of potential in it long term. Then I have JP Morgan Chase, another fintech, or not fintech technically, just a financial industry company, but they are, I think, better than a lot of the other banks out there and pay nice dividends. Facebook, I added to this recently. They have great numbers recently, and I think it just is so dominant in the social media space. By far and away, I think one of the top 2 social media companies out there. If you consider YouTube too, I think YouTube is a great asset for Google, but I think Facebook is pretty dominant in the space. No one else uses anything else as much as I think they use Facebook and Instagram. Of course, there's TikTok now too, but that doesn't appeal to as many people, I think, and it's harder to monetize. GHVI, merging with Matterport, definitely a company that I like a lot. I think them getting into the insurance business will be huge, and them working with companies like Airbnb or maybe, I don't know, even hotels or something like that, where they can take a picture of the whole room for insurance reasons, I think could be big. I just really like the company. It is trading at a little bit of a rich valuation, but over the next 10 years, I think they're going to be awesome. A great hold. Some people were talking about them being the stock of the decade, and then they fell down. and fell down and fell down and fell down over 50%, almost 60%. But I was able to pick up a lot more shares on those dips. Then I have Disney. I bought this. I bought a majority of it when people just weren't factoring in the streaming. I started buying, I think, in the 90s. Now it's about 170. And I've been buying all the way up to, I believe, right around 150. I might have added a little bit more after that, but not much. I like them as a company. Once they reopen the parks, they'll have a lot more money coming in before that, or even if they don't, then the streaming is going to grow faster. Now, their last quarter streaming numbers were a little bit of a disappointment for some people, so the stock did fall a little bit. CLSK, great Bitcoin mining company in my opinion. I think it's more diversified than a lot of companies. So the reason I say that is because they're in the energy business and then they bought Bitcoin miners. So I think it's definitely one worth buying, at least if you feel strongly about Bitcoin in general. Now, this one's fallen a lot too. I think it was in the 40s. It fell down all the way to 14. I picked up a lot more when I was around 14. I even picked up some long-term call options. So this 5.1%, about a fourth of that does include options. So they're 2023 call options, PLTR, which is Palantir. About 6% of my portfolio is in that. Another one that can do anything short term. I don't think anyone buying this is thinking short term with it because we see it fluctuate between 17, 18, and 25 regularly. But if you start looking at their margin, if you start looking at the kind of revenue they're bringing in, what they're doing to grow, you look at the significant partners that they have and the significant clients that they have and the level of them. Like you're talking about the nuclear defense for the United States. You're talking about different companies that are leading in their areas and their sectors. I think you don't find a company that has better clients than Palantir out there. So it is expensive in terms of normal stocks, but if you compare it to some of its peers like Snowflake, I don't think it is necessarily that expensive, and I think long term it's a great buy. Now, of course, this is financial advice, but that is my opinion. And then we have Tattooed Chef, which has been just blowing up recently. I had about 5% of my portfolio in it, even just a week or two ago, and then it jumped up. The share price jumped up about 40 or 50%. So now I have 7.5%. I'd honestly like to buy more. If it falls more, I'll buy more. If it falls probably below 20, maybe a little bit lower than that. So I bought a lot when it was in the $16, $17 range. And this is a company that's just growing quickly. And it's got a lot less risk than some of these other stocks up in here. So it's got less risk. It's got a great balance sheet. It's growing quickly. The innovation is there. It was just trading too cheaply. So I picked up a good amount there. And then I have some index funds. So I have 20.8% of my money in index funds. I've gotten a lot of these back before, or I bought a lot of this back before I started buying individual stocks. And then some of them I do use kind of as a, break in case of emergency. So if there is some great deal in the stock market, like Tattooed Chef falls down to 16, or Palantir when it fell down to 16 or 17, I do end up selling a little bit of my indexes because they're still near all-time highs, and we were getting smashed in the growth sector. So I ended up selling some of them to put into some of these growth stocks in the top 3, which ended up being a great play, a great short-term option to get some more money into the market. Now, I do have some cash on the side too. I think that's always important. So one thing that I have a problem with is I am a little bit over-diversified. I honestly wouldn't mind cutting out some of these positions because I can't pay attention to everything that's happening in some of these smaller stocks that I don't have a lot of money in. Thing is, I do believe in the long-term outlook of them, so it makes me feel a little bit better because I don't have to look at them every day. If there's some article that comes out saying, hey, we think this is overvalued, oh well. Like, I believe in the long-term vision of a lot of those smaller positions I have, but I still like to be diversified. So again, I might want to trim some of them. I might want to kick some of these stocks out and just sell them and put them more into some of my higher conviction plays. But I've been doing that a little bit recently. I need to do more of that. I do have some cash, like I said. I probably have around 10% cash, but again, it's hard for me because I do pay taxes so regularly, but it's also irregular amounts. So I don't just pay the same flat amount every 3 months because I have to pay quarterlies. I've had to pay taxes the last 3 months, how it's worked out because of last year's taxes, and then the quarterlies are all weird. So I don't know exactly how much cash I have, honestly. I have 10,000 probably in some of these different accounts, but then I have more that I will be able to throw at the market. I just don't know how much yet because of taxes. But of course, let me know your opinions on this down below. I know some people give me a hard time because they're like, they've seen some of my income videos maybe before. They're like, if you're making all this money, where's all the money going? Well, I have a wedding, I bought a house, I have to buy stuff for the house, I have taxes. So there's a lot going on, a lot of things swirling around. I don't want to come up short on taxes or anything like that. And I have been buying a good amount of crypto recently. So I have been adding to these positions, but I will definitely add more in the future. I would have loved to add some more, even more than I did during the last couple recent dips. That's always easy to say, harder to do, but have to save some money for taxes. Let me know your thoughts on this down below. Thank you guys so much for watching. Let me know what I should have in my top 10 that I don't, or even my top 5. Let me know in the comments below. Thank you guys. Thank you for hitting the like button for this transparency and checking out those links down below to the Patreon or to Webull if you want that free money. There is a link down there to BlockFi too in case you want interest rate on your cryptocurrency or on stablecoin. Those don't even fluctuate in price, but they just pay you 10% APR or APY. So they give you 10% interest and it pays every single month. And again, it's a good place to keep money in my opinion. But let me know your thoughts. Thank you guys, and I will see you in the next video. Bye.